It's Fed Week. That's our topic for today's Backstage Pass. Good morning, everybody. I hope you had a wonderful weekend and hope you are getting this week kicked off to a good start. Stocks are up a little bit so far today. Mortgage bonds are down today, and mortgage rates are continuing their upward trend that they've been in for the past month and a half. We'll talk more about that in just a minute, but first let's talk about the news of the day and really the news of the week. It's Fed Week, and Fed Week is kicked off with the Atlanta Fed. Atlanta Fed always does an estimate for GDP every quarter. And about 3 weeks ago, they released an estimate for Q3 GDP that was set 2.6% increase. And that's what they were estimating for Q3. Well, today they announced that they revised that lower, and they've revised that lower significantly to only 0.5%, 0.5% increase for Q3 GDP. That's a massive move from only 3 weeks ago. And on that trend line, we could actually see a negative reading on the Q3 GDP whenever that gets released next month. Be watching that very closely. It's a very important indicator on obviously what's going on in the economy. So that's how we've kicked off Fed Week so far this week. The Fed is having their FOMC meeting this week, and they are expected on Wednesday to announce a Fed fund rate hike. That announcement is going to come out at 2 p.m. on Wednesday, and it's expected to be 75 basis points. There is some talk that it could be as high as 100 basis points, but right now that's what the markets are expecting is a 75 basis point rate hike for the Fed fund rate. Now, in other news this week, there's a lot of housing news that's coming out this week, including building starts, building permits, active listings, existing home sales, and things like that. All of that's for the month of August. But today, for the month of September, the NAHB, the National Association of Home Builders, released their housing market index that they release every month. And this is for a couple months now in a row. This is definitely showing a contracting housing market on the builder side of things. The index decreased by 3 points from August to 46, from 49 to 46 for the month of August. Current sales decreased by 3 points to 54. Sales expectations decreased by 1 point to 46, and buyer traffic decreased by 1 point to 31. And again, we've got more housing news that's going to be coming out later this week. Now, onto the bond market. Mortgage bonds are down 27 basis points at the time of recording. The 10-year yield is up about 2 basis points. On Friday, the national average for a 30-year fixed mortgage, that rate ended on the Friday at about 6.35%. Today, we're expecting that to be maybe just a little bit higher than that, maybe around 6.4% based on the way that the mortgage bond has been trading today. And look, again, you know, the 10-year yield has been testing that 3.49% ceiling that was set way back in June. It's been on an upward trend, and it's starting to get squeezed, but you know, it's bouncing off of that ceiling. This morning it tested that ceiling and came back down. On Friday it tested that ceiling and came back down. And really, you know, bonds, the bond market and bonds are really in oversold territory right now. Mortgage bonds have been oversold for coming up on a month now. And while that doesn't necessarily guarantee that there will be a bounce, you know, the meeting this week from the Fed and the Fed fund rate hike, while that's expected and built into the market, what really everybody and all the markets are going to be looking at is the comments from Jerome Powell, how the Fed is feeling about how their tactics are working on inflation, what they're expecting to do in the future for the Fed fund rate. Those are the things that the market's going to be looking at, and those comments and that reaction could be the lever that causes mortgage bonds to bounce the other way, causes that 10-year yield to come back down, mortgage bonds to start to increase, and we'll see mortgage rates start to fall. So that's what we're hoping for this week. That's what the markets are, you know, the markets are really going to be watching again, Jerome Powell, and watching what he has to say. But for us, for mortgage rates, we're hoping that there's a bounce on the mortgage bond, and we can see some mortgage rates start to pull back off of their highs where they're at right now. Now, that's all the news that we have for today. Remember to stay positive. Have a great week. We will see you tomorrow.